Very good morning to all of you. Welcome to Performance Optimization Simulation Session. Myself, Sujit Kakkar, and today is Wednesday, 7th of Feb 2018, right? And let's do a quick review of the trades which got triggered in the last 2 days, right? So we planned this trade long time back. This was a weekly income trade for us. So the lower time frame would be the hourly chart. And you can see this trade was planned back in December, right? Somewhere maybe close to 5th or 6th December is when we would have discussed this, that we would like to go long at this pro gap. You can see, we had this really nice move to the downside and then prices, they gapped up. So this was a pro gap where we want to go long. And the very first time when the prices came back to the zone, we missed that trade by 5 paise. Right, so the prices, they came very close to our zone and started moving up, and the trade was not filled by 5 paise. And because of this volatility which happened in the last 2 days, prices again came back to the zone, which means this gap was still an open gap for us, could have been traded. So because of that volatility, you can see that on 5th of January, prices came back to the zone. So early in the morning, the very first candle, prices opened inside of the zone. And if you talk about your nearest target now, this base drop is your nearest and opposing fresh supply area, which could have been your target one. So the chart was showing us a reward to risk ratio, which was almost 6:1. And I've told you many times that, whenever you see those really nice, beautiful reward to risk ratios, it's always good to hold for those big RRs. Now, depending upon whether you were booking partial at 2:1 or you waited for that complete 6:1 as your target one, different things could have happened. So the very first candle gave you your 2:1, right? So if you were in this trade, the very first candle would have given you your 2:1. But if you were waiting for that 6:1, by the third candle, you also got that 6:1, and you would have been in and out of the trade in about 3 hours, right? So in about 3 hours, you got your 6:1, even though it was a weekly income trade. But the move was very, very fast, and that is what I always tell you, that volatility is not our enemy, volatility is our friend. Because what can happen is, because of volatility, prices can move really, really fast and give you those bigger targets in a shorter span of time, right? So that's the very first trade, Bharat Forge, which almost gave us 6:1. And if you look at this demand area, the beauty is, again, yesterday prices, they gapped down, right? And again, from the same area, we got that really nice bounce, right? So can you see this demand zone? Not just once, it worked out twice for us. Bank India. Right, so can you see yesterday when Nifty gapped down like crazy, right? So that was the opportunity that a lot of trades which we planned back in time, or maybe if you were planning some trades for yourself, now we were getting some stocks at cheaper prices. So this was a trade again which we planned long time back. You can see this was planned way back in October. Right, so we planned in sometime in October that we want to go long, but after a very long period of time, prices, they came back to our zone, and you can see that yesterday we just missed that trade. Prices came very, very close to our demand zone. If you were using wick to wick method, probably yes, you would have got the fill, but the body to wick method, we missed it by 15 paise. Right, so that's sad, because if you would have got the fill, even if you were using the fill of the gap as your target one, but at the end of the day, you didn't get your target, and you would have closed it by the end of the day, you would have still made about maybe 9:1 or 10:1 on this one, right? So that's really sad. We missed it by 15 paise, right? So these are the trades which got triggered. Again, I'll add, I know when the markets are crashing like crazy, what happens is emotions, they take over, right? Even if you've planned some long trades, you get a little scared to participate. But once you start seeing such examples, which only comes with time and experience, by default, you'll start controlling your emotions. Because one thing which you have to remember is, if the market is crashing like crazy, what is happening here now is that the market is at discount, right? And which is almost like, when you go to some malls, or if you go to some shops, right, and you see they have sales, right, 20% off, 30% off, what do? We get excited to buy that stuff, right, because we are getting it at a cheaper price now. So the same thing is happening in the markets, right? So when the markets are crashing, you are getting stocks now at discounted prices. So make sure that if the stock, or if that trade is a valid trade based on your trade plan, based on your uh, methodology, don't be scared. Just simply place your orders. The only time you should be scared is when you don't have a stop loss in the system. If you have a stop loss placed for you, you know the worst case scenario is that you would be losing your predefined risk, right? And maybe some slippage over that. So when you have your risk already capped by using a stop loss, there is nothing to be scared of, right? And that's the beauty of demand and supply, right? Because I understand that initially it would be a little bit challenging for you, that when the markets are crashing like crazy, I know the emotions, they become very, very strong. It's a little bit challenging to press the buy button. But with time and experience, you know, all those things will be taken care of, because you will start seeing that sticking with the rules and keeping emotions out is always much more fruitful versus being into those emotions and passing the trades. Right, so those were the trading ideas which got triggered in the last 2 days.